You are on the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView, and in today's video, we will be breaking down a pair both from a technical and an order flow perspective to understand where are the best probabilities for a trading opportunity on the pair to obviously be capitalizing on it. So the video will be both very educational and practical, so without further ado, let's get straight in it. Today, I want to give you a full breakdown of the situation that currently we're having on gold, because gold is very near to providing to us a very good trading opportunity. So obviously, I want to give you a full breakdown to show you how we will be approaching it with students for a nice trading opportunity. And as usual, I will keep the analysis as educational as possible. So first, we will be speaking about this market from a technical perspective. We will then go and see what we have from an order flow perspective to see what the biggest banks and institutions are currently doing on it. And obviously, if you're able to follow how the biggest banks and institutions are shifting their positions over time, you do have an advantage over your competition in the market. And by the end of the video, you will know exactly what kind of opportunity we can be looking for on this commodity. Now, starting from the monthly time frame, what do we have? Now, on the monthly, we consider the market has just provided a very nice impulse and correction. Now, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And what we can see is that the market has provided a nice retracement all the way down to the 50% of the Fibonacci taken on the impulse. Specifically, one very important thing that we can see is that now the market has closed below the 0.382, and the close below the 0.382 makes the 0.382 be turned now a resistance zone, because as you know, the 0.32 is the first support area that the market encounters in its move to the downside, and we definitely wanted to see gold make this move to the downside. But after a level in the market is broken, if it was support, is turned resistance. So now that the market has broken below it, this previous support is now turned resistance. So what we can see is that the market is actually testing exactly a resistance area from which we can definitely expect a rejection to the downside. So overall, we have a bullish pattern, which is this impulse correction and impulse pattern to the upside, but at the same time, we do acknowledge that the market is testing strong resistance. Going down on the weekly, what do we see? Now, on the weekly time frame, the structure and pattern that the market has created is quite clear. We have a strong impulse and a correction. Now, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the high to the low of the impulse. And if we take our Fibonacci from the high to the low of the impulse, we consider the market has retraced exactly to the 0.32 of the Fibonacci taken on this impulse, which again is a strong resistance area. So what does it mean? It means that the market is currently testing the 0.32 in combination with the 0.32 that we have on the monthly. So a confluence of the monthly and weekly 0.32 Fibonacci retracements. What we can also see is that the horizontal structure that the market has created at this area is quite strong. In fact, all across this zone, we have quite strong previous support and again support here, which is now turned resistance after the market has broken it to the downside, creating a quite strong layer of resistance, specifically because it is now in confluence with the 0.32 of the Fibonacci taken on this weekly impulse and on the monthly impulse to the upside. Going down on the daily time frame, what do we have? Now, on the daily time frame, price action is quite clear. Now, we had spoken about gold quite a few times in the past. I spoke about gold when the market was here, and I made a full breakdown explaining all the reasons for which from here, first, we wanted to see a move to the downside at least to the demand that we had at this red candle, and that is exactly what the market did. Then the market broke below this demand. At that point, it is turned supply, and what I expected was the creation of this head and shoulders and this move to the downside. And in fact, I made a full breakdown of gold when the market was here, explaining all the reasons for which from here we wanted to see this move to the downside. And again, that is exactly what the market did. Then we wanted to see the market provide a retracement, but the retracement never came. So there was no opportunity to be looking for a continuation as no retracements came, so no opportunities. And by the way, I will link this previous analysis in the description, so you can go and check it out for further reference and more free education. You find it all linked in the description. Just a quick reminder, make sure you comment below and you let me know which pairs or topics you would like me to cover or analyze in the next videos. But at the moment, what do we have and how we can be looking for the next opportunity in this market? Now, before I show you that, so the situation that currently we have on the daily and how we can be looking to capitalize on it, let's first go and give a quick check at what we have from a COT perspective. So what banks are, hedge funds actually are currently doing in the market anyway, the non-commercials. Why the non-commercials? I get this question a lot. The non-commercials because those are the speculators, okay? People that are in the market for the money, okay? Not for some external reason. They are in the market simply to make money. Those are hedge funds, and obviously we want to follow them because that is exactly what we want to do. We are in the market to make money, not for any other reason. So what we can see here is that with the last report, hedge funds have added 4K long positions and closed 12.3K shorts. So quite a massive amount of shorts got closed and longs got added. Obviously, the market followed with a nice move to the upside, breaking above the supply that the market had provided at this candle. Now, during this move to the upside, if the market would have provided some sort of bearish structure inside of here, then we could be looking for a potential shorting opportunity because that is strong supply. But the market remained bullish all the time, so we didn't even put gold on watch list with students because it was quite clear that no opportunity could be found on it. And now what do we have? As I just said, we have shorts getting closed, longs getting added, long exposure increasing from 57.7% to 60.3%, with shorts getting decreased, the short exposure getting decreased all the way down to 11.9%, and net positions reaching 260K with 324K longs and 64K shorts from an institutional perspective. So gold is pretty bullish. And now what do we know? We know that this zone, all this zone here is strong resistance because clearly it was the previous support, which is not a resistance here from a weekly perspective. And what we also know is that this candle here is a strong demand area for gold. Why it is strong demand? Because in all this move to the downside, there is one candle not related to the move, which is exactly this green candle here, which was strong supply, which the market broke to the upside, and at this point, it is strong demand. So what we can expect, since overall we are pretty bullish on gold, is a retracement from this resistance before the continuation to the upside. One further thing that we can see here on the daily is that the market has provided this W formation. Now, after an impulse, a correction, a lower low and a higher high, this is a W formation and you expect the market to create a move to the downside to go and complete the pattern at the neckline. So again, from here, we definitely do expect the market to go and test this strong supply zone. So at this point, there are two opportunities. One, to be looking for a short, and then to be looking for a long. So how we will be approaching these two opportunities with students? As usual, trading is reactive, trading is not predictive, and the monthly, weekly, and daily timeframes are the best timeframes for the direction of the market, but the best timeframe for confirmations and entries, that is the 4 hours. So what we will be doing is monitoring price action from a 4-hour perspective. Now on the 4 hours, we can see that everything is still pretty bullish. The market can easily from here continue to the upside. So at the moment, can we be looking for any shorting opportunity? Obviously not. We don't even have gold on watch list yet because everything is still too bullish. However, things might change when the market will open on Monday. So what we will be doing with students is monitoring price action from a 4-hour perspective during this move to the upside. And we will be waiting for the market to shift from a 4-hour bullish market to a 4-hour bearish market. And as soon as the market will shift from a 4-hour bullish to a 4-hour bearish market, at that point we will add gold to our watch list with students, and as soon as the market will provide to us one of our valid entries, we will be taking a nice shorting opportunity with a good risk to reward and good probabilities for the market to make a move to the downside and go and complete the pattern at this demand. And then when the market will reach this zone, we will speak about gold again since we have the possibility to be looking for a potential long, but first we need to see how the market will approach this zone. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis, education, and updates for all of you. You can also go and check out the mentorship program. You find the link in the description. It's a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them live with me. Every single day you get a new daily market breakdown showing you exactly how to apply the strategies with entries, stops, take profits, as well as having me answering all your questions every single day. So I really suggest that you go and check it out, and I will see you in. The link is in the description.